where you're joining us from. I'm always curious. I actually do appreciate some feedback on here. So join it. You just give me the city. By the way, I've been everywhere. I traveled for about 15 years when I was running Thinkorswim, TD Ameritrade, education. We traveled everywhere. The state of chaos. Blake, you're in Utah, man. There's no chaos in Utah. Okay, you want to go to some chaos over here? There's people in here from Illinois. Okay, that's chaos, man. Sorry, I had to. I saw somebody chatted in like Northern Illinois. Okay, been there, done that. So it's awesome. Like actually, of all things, when you think of like Utah, you think of like it's so chill there. Like put a mirror under the nose to make sure somebody's breathing in Utah is kind of the way I think of it. It's good stuff. I like it. Yeah, Illinois. Yeah. If by the way, Kevin chatted in. He's like, "Yeah, I'm trying to escape Illinois." Hey, you're the last one. Turn off the lights. Oh, can't. I did Chicago for years. Hmm. So I actually commuted for the better part of 15 years. Office, my main office, our branch of supervisory jurisdiction, that's what you call it in the brokerage industry, was in Chicago. And I was Thinkorswim. I was in Chicago, so I commuted back and forth from Scottsdale to Chicago for the better part of like 15 years. And I kept a corporate apartment in Chicago. And for you guys who know Chicago, I actually lived in a pretty famous building called Eugenie Terrace. So much fun. It was like in my 20s in there. It was a good time. There's a lot of stories. That's actually where I was living too when I was making markets. So it's fun stuff. So today we're going to get into it here momentarily. Awesome. Joyce is over in Spain. So welcome. Oh, we're going to get into it here momentarily. The market's a little bit more volatility getting thrown off once again today. I mean, the only thing that stands between us and the abyss. Look at this, by the way. Meta, huge sell-off, rallied back up. The only thing that stands between us and the abyss looks like Tesla right now. And suffice to say, Tesla might be done with its rally today. So things could soften maybe. If you look at my screen, which you would be looking at right now, you will see this line across it. Okay. That line right there represents the lower edge of the SPX expected move. That's a line that we draw every Friday afternoon. And it's pretty amazing because, well, that's where the market is right now. And we happen to have a trade that's literally sitting on it. We have an SPX butterfly that's actually sitting on it. Now, I don't want to geek out on anybody because, well, I'm just giving you a little bit of a market discussion before we get into this. But yeah, just making sure everybody's good. Okay. Oh, cool. Somebody actually lived in Eugenie Terrace. Okay. Rooftop pool. That was the party, man. So that was party. There couldn't have been a better place to live when I was in my 20s than Chicago and Scottsdale. Like, and I was going back and forth. You have to imagine it's a good time. It was a good time. Had a good time. All right. That's it's enough of that. Okay. We got to get some caffeine in us. Hmm. So, by the way, I didn't even mention, I am broadcasting from Paradise Valley. Paradise Valley is a little town basically inside of Scottsdale, Arizona. We have a home here. I predominantly live in the Virgin Islands. People, why? Okay, because it's the Virgin Islands. I have been in Arizona a lot this year. Well, over Christmas, we were in the Virgin Islands. This past Christmas, last year, we were in the Virgin Islands, and we got back in our house here in Arizona. It was totally flooded. So, by the way, here's a picture if you're kind of curious. That's what my backyard looks like right now. I'm not joking. It's if you want to see. I was telling people earlier, if you want to see what $1 million of concrete looks like, that's it. Some of this is from the backyard. Some of this is from the inside of the house. But this actually goes 8 feet deep and is spread over like a quarter acre. It's about $1 million of concrete we actually had to excavate out. So we were rebuilding the house in Arizona as a pipe broke, house totally flooded. It was an unfortunate circumstance, but I'm stuck here in Arizona a little bit. But anyway, the I go back and forth. I actually like to be down on the island, especially like in the winter months. It's good. It's a good time down there. A lot of traders actually live down in the Virgin Islands as well, so it's kind of how I ended up down there. All right, let's get into it. So, a couple things. A couple things right up front. House is all concrete and steel and glass. A few things again right up front. Everybody, again, as I said, always ask, "Is this live?" It's live. Okay. I do and will go at a pretty good clip today. So focus, which we'll talk about here in just a moment. But with that, my name is Don Kaufman. I'm one of the co-founders here at TheoTrade. I'll give myself a little bit more of a formal introduction in just a moment. But this is earnings flips. I'll explain what that means here momentarily. Risk disclosure. Okay. We're no longer financial advisors to say we here at TheoTrade, many of us here at TheoTrade actually come from a background of the brokerage business. So many of us, when I say many of us, we have Blake Young and Jeff Bierman and Brandon Chapman and Corey Rosenblum, and so Gianna DePoce. Many of us have actually held a large number of licenses over the years, and we're no longer affiliated with we're no longer affiliated obviously with Thinkorswim or TD Ameritrade, which is now Charles Schwab. We do have a lot of relationships though with those brokerage firms, including Tasty and E-Trade, and even Robinhood. Started talking to Robinhood recently because I have a very close friend that actually even runs Robinhood. Copyright disclaimer. Look, the only reason I throw this up here is just to show you, look, if you need to get a hold of me after today, just go right here. Support at TheoTrade.com. Support at TheoTrade.com. Just put my name, Don Kaufman, in the subject, and it goes right to me. So we use what we call a common inbox here. Here's a little bit about me. So, everybody always kind of has like this story of like how I got involved in trading. My story is a little bit different, probably. Like I always hear people like they're like, I was a school teacher and then I was a trader. I was a taxi cab driver. I was a trader. I grew up around it. People always ask, well, when did you learn about this? I have no idea. Like I can actually, I honestly remember, I don't know, living, when as a kid, I was actually living in New York, not in like New York, but like way out on the island. But I remember like Thanksgiving dinners as a kid when we're talking about in the money, out of the money, puts, calls, literally as like, an 8-year-old kid, like, in the early 80s or whatever. So I grew up around it. I had never an intention. Honestly, I had no intention of ever getting into this business. 3 weeks out of college, on a whim, I ended up in Chicago just to kind of clerk for the summer. That was 3 weeks out of college. I went from ramen noodles to clerking at the Chicago Board Options Exchange. 3 weeks after that, a trader didn't show up on time for work. It's been forever since I've actually told this whole story, but a trader didn't show up for time on work. So, and then when he did show up, he was still intoxicated from the night before. They fired him on the spot, handed me a jacket, and I started trading. So now we're 6 weeks out of college. We're in basically July of 1998, and I am down trading in one of the most fierce pits in the known universe. I traded some of the index pits. I'm an index kind of a guy. I like SPX, OEX. That's where I kind of grew up, and the market was one of the most volatile summers on record. Literally, I was in there for less than 1 month. 1 month into my trading career, I was trading in a 40 VIX. What happened? Long-term capital management happened. It was absolutely wild. And I was kind of born into volatility at that point. So that's 1998. Fast forward a few months after that, like when I was trading, like literally the first year I was trading on the floor, I got approached by a gentleman that many people know. His name's Tom Sosnoff. Tom said, "You're new, you're a kid. Okay, we've heard good things. Why don't you come with us? We're starting a brokerage firm." And I was like, "Okay, all right. When's it ready?" And they go, "About 6 months from now, we're going to grab you and just hang it up. And the best advice I could ever give you is get off the trading floor," which actually was wonderful advice. So, literally 18 months into my career, I was working at a startup. Really, really early on, that startup happened to become something called Thinkorswim, and they made me like I was 24 years old. Okay. At the time, they actually made me an executive to the point where I used to fly around. I couldn't rent a car because I wasn't even 25 years old. So they had to actually have an assistant with me that would be able to rent cars and stuff. There was no Uber. Okay. We're in like, 2001. They literally had to like have somebody come out with me on the road. And I actually built the education division of what was Thinkorswim. I built all the chat rooms, and then my group enveloped everything from scanning to charts. Anyway, we went on to take the company public in 2007. We were acquired by TD Ameritrade in 2009. I signed a 5-year lockup clause with TD Ameritrade. I exited TD Ameritrade in 2015, and of course, we built TheoTrade. And again, it's been a long time since I've told like that whole kind of story. And I had never had any intention of staying in the brokerage business, and I stayed there because TD Ameritrade, like I love Thinkorswim and so forth. That was a great time. But like TD Ameritrade was like 5 years. It was absolutely brutal. Like talking to HR every single day. We had 768 people, okay, in my organization. 768 people, like literally reporting through my Series 24. It was ridiculous. I spent more time with HR than I did trading, and I absolutely hated it. So when we exited, I took some of that core group and we built out TheoTrade. And one of the things that we talk about, and a lot of what you learn here today, okay, and a lot of what TheoTrade is, we know this business because we got to see your order flow for 15 years. For 15 years, I got to see every single trade that you did, and we studied your trades. But I mean by that, we didn't go in there and they go, hey, let's go look at Mike's account. By the way, I totally did do that sometimes. I don't mind saying I totally did. Like, oh, what's this guy doing? Like I could click on anybody's account. Like if you were in the chat rooms, I could literally click on you and see like your whole account. What the hell is this person doing? You could totally do that. But we used to look at aggregate, like if there's 200,000 traders that traded this strategy, I can tell you who made money, who didn't make money. I can tell you the probabilities of every single strategy. If you traded iron condors, we knew if you made money. When I say we knew if you made money, we knew what strategies worked and what strategy didn't. And that's exactly what I'm actually going to cover today. So I wanted to talk a little bit about earnings because there's so many misnomers around earnings, and that's what I'm going to get to. All right. So is that okay? Is there an okay introduction over here? So everybody good with that one? Again, some people have no idea what a Thinkorswim even is. Crazy, but this firm originally sold for $600 million. Okay. And today it's the driving force. It's the biggest trading application in the whole world. Literally, it's the biggest trading application in the whole world. The application is probably worth $20 billion. Okay. Let's just say we weren't wrong. We were just early. By the way, I love that question. Somebody said, how'd you come to name the company TheoTrade? It means theoretical trade logic. Okay. I'm sitting around one night, theoretical trade logic, because you want to trade, like you want to learn theory, you want to learn logic, you want to trade like TheoTrade. So, all right, let's get down to business. Let's talk about earnings. Because by the way, I'm doing this a lot today. Like I don't really love PowerPoints, so I'm going to do a lot of this live. Let's do it live. I like to do that. So people have heard earnings are scary. Okay, earnings are volatile. You shouldn't trade earnings. There are ways to do this. Okay, I mean, how many people just by like say me? How many people have heard this before? Okay. Have you guys heard this before? You can't trade earnings successfully, or like earnings are scary. Okay, like you hear this stuff all the time. What I'm going to do today is I'm actually going to show you specifically an area that you can exploit, and I'm going to get to that in a moment. But people have always heard this, and I'm going to start off by just saying like there's a lot of earnings obviously coming out. Like even tonight, tomorrow morning, and then next week. Next week is like it's big boy week, which we're going to get to in a moment. But I want you guys to know right off the bat, there's opportunity in earnings, but it's very finite. You kind of got to know, all right, what you're doing, and that's exactly what we're going to cover today. Like then people say, oh, you should wait till after earnings. You should step out of existing trades around earnings. Like literally, I'll have people like, I must exit everything that has earnings. But then if you looked at something like Tesla today. Like if you got out of this position, like if you were a long position, okay, winner, chicken dinner. I mean, year to date, Tesla was actually down. Yesterday it was down still 13%. Now Tesla's actually up by 3% on the year. That's some big boy stuff. Like if you got out before the earnings, like look, I don't mind saying this is an a ridiculous move inside of Tesla, but it is what it is, right? You should just buy high flying stocks ahead of earnings. Well, in Tesla's case, Tesla hasn't been high flying. Maybe we should have figured that one out. Actually, I got to be honest with you. Tesla really surprised me. Um, and you should ride out earnings and hope for the best, which is crazy. Okay. All right. Listen, don't believe the earnings lies that you've heard. Like, look, I don't care if the earnings are going to be good or bad. And I want to get this out. And I actually, putting this together, like literally, I don't care if the earnings are good or bad. And when I say that, like, I'm not being facetious. Okay. You don't know how the market's going to react. I don't need to know how the market's going to react. There's something I've said for years, and I want to reiterate this comment. And I've said this exact same comment for years. If I had the earnings numbers in my hand today for earnings that come out tomorrow, do you think I could actually pick the direction of the market? Don't get me wrong. Sometimes you can. Sometimes it could be like, oh, those earnings are so good, man. You know that stock is going up, you know? And other times you're like, oh, the earnings are so good, but then they guide lower. Like I argue constantly. I could have the earnings in my hand right now, and I still couldn't tell you what the underlying is going to do. And I don't mind saying that. There's some earnings that came out in the last 24 hours. They were not good. They were not good at all. And yet the stock still rallied. Okay. Like if you look at stuff like, the owners of Louis Vuitton and so forth and Gucci. Okay. Uh, their earnings were absolutely, the owners of actually Gucci, their earnings were absolutely horrifyingly bad. And the stock actually rallied by 2 to 3%. And you go, why? Because the market literally said it's so bad, it can't get any worse. Okay. That is incredible. So, and we're going to talk about this because I'm telling you, it doesn't make a difference. By the way, I love it. Somebody came up with Starbucks. That was actually the next thing I was going to talk about. Literally, somebody came up with Starbucks. Well, Starbucks, okay. Starbucks, okay. They got the CEO, Brian. Brian is the guacamole master. If you guys have no idea what I'm talking about, the CEO of Starbucks just changed. Okay. They just pulled in the CEO from Chipotle. He did the turnaround in Chipotle. He did a turnaround in Taco Bell. So we went from Taco Bell to Chipotle to Starbucks. And it's just like magnificent because whatever this man says, they're like, I'll buy it. But the earnings were terrible. It actually was showing like this place is dirty, disgusting, and their earnings are down. But damn, we got to buy it. And that's how wild things are. So I don't care what the institutions are saying, what they're expecting. I don't need to know the market. I don't need to know, anything about like, predicting the direction. Okay. We are going to use finite criteria, specific criteria, that is entry and exit steps to know which earning opportunities, okay, are viable. And that's exactly what we're going to talk about. And we're actually going to use earnings flip criteria. Okay. So earnings, they're coming. What do they look like? Well, here, this is a calendar. All right. Oh yeah, that's a calendar. All right. Okay. But like, no, seriously, like the calendar. Like if you're on Thinkorswim, you don't have to be on Thinkorswim, but if you're on Thinkorswim under Market Watch here, there's actually a calendar. There you go. This is all the stuff that's coming. And this, by the way, I want to show you something. This is next week. So it's next week, right? And if you look down here, it's like, times 65. That's everything that has earnings. This is just Monday. That's, what we call this. We call this Monday. Look at that. That's not bad. Okay. FFIV. So look at how many, there's some big boy companies in here, even on Monday. Even on a Monday. Somebody has a case of the Mondays. But all of these have earnings on Monday. Everything that you're seeing here is an opportunity. Now, I'm actually going to get into the more finite opportunities. On Tuesday, it's like 128 companies. And this is where it starts to get the big boys. Okay, the big boys start to actually come out on Tuesday. Obviously, on Wednesday, you start looking at Wednesday. Okay, the biggest and the baddest of them all. So all throughout the course of next week, you just think about how many like earnings and earnings related opportunities there happen to be. And you just have to understand that earnings, you don't have to be afraid. Like these are great opportunities. Okay. It's again, what other strategy allows you, to know the days, weeks, and even months in advance when you're going to take a trade. So you can actually kind of plan out like earnings trades, like, okay, this is going to start to be, your heavy days to trade. Look at this, 172, 240, okay, 48. Like this is big boy stuff in here, and it's right in front of you. So you can kind of plan out and be like, all right, we're going to be busy this week and get your groove on a little bit. All right. So not only okay is the timing of the trade like clockwork, so is the option setup. And we're going to talk again about that. Like all of it can be planned because you're coming into like the apex earnings week. That is literally next week. Like next week is that's it. That's the peak in the S&P 500. Which yes, we are going to trade more liquid products, the S&P 500. So with that, the other really key thing over here, okay, this is not okay expensive. Like we're not expensive flipping. Whenever anybody thinks about like flipping, I think that like when you use the term flip, they're like, oh, let's flip a house. Oh, let's flip a car. By the way, that was the indicative of a car. I like that picture over there. There's car keys and like a little matchbox in there. Okay, you're not going to do any of that. We are going to be taking okay very finite shots, opportunities, if you will, and that people is exactly what I'm going to explain now. So for me, this is it for the PowerPoints out of it. Let's go to the marketplace. Let's explain to you exactly what earnings flips are. So the first thing I want to say, okay? So yes, I am looking at Thinkorswim, okay? Not imperative that you're on there. By the way, I am also looking at Tasty. So I use these platforms kind of interchangeably. Tasty. I actually trade a lot now on Tasty, but I like to do my analysis a little bit on Thinkorswim. I don't mind saying that to everybody. Okay. So let's get into it. Let's first of all talk about what earnings are coming up. So this calendar is already set to next week. So I'm going to back up a week, right? And I'm going to look like, oh, what's coming tomorrow? All right. So I can just at a glance, I can see all the earnings that are coming this afternoon. I can see all the earnings coming tomorrow. You guys want something easier? Okay. Yeah. Anybody want anything easier to figure out like what's really coming? Hmm? Quite frankly, I find a calendar. Okay. What is this? Like, the early 1900s? Forget that crap. Just go over to the scanner. Okay. You're like, why are you using the scanner? Okay. Because I like to cheat a little bit. Watch. Scanning the S&P 500. Oh, magic scanner. By the way, if you do not have Thinkorswim, okay, don't feel left out. This is work that we can do and provide you trades. Okay. This is work that we do and can provide you trades. Oh, magic scanner. Come in here. By the way, when it comes to the scan tab, there's a lot of people that know a lot about this. Okay. We built it. When I say we, myself and Jeff Bierman built most of this scanner. Like all of these that are in here, when I say built it, like we literally wrote the scripts for abandoned baby bottoms and all the different popular studies, literally wrote the scripts for these. This is scanning the S&P 500, okay? Earnings, has earnings, okay? Anytime in the next two bars are days, okay? And go, oh, magic scanner, hit scan. There's 44 products in the S&P 500 that have earnings. Now, some of those could have come out this morning. That's possible. So then I just kind of cruise through here and I go, ooh, Dr. Pepper, okay? But did this already come out? I'm just making a quick point. Did this one come out? Oh, yeah, that one already came out this morning. So we can kind of go through very, very quickly at a glance, though, and see everything that has earnings, okay? I happen to know off the top of my head, Capital One Financial, I'm almost positive. Capital One Financial comes out tonight. I know Colgate Palmolive, okay, comes out tomorrow morning. I'm pretty sure DEC is tonight, but let's look. Okay. So, oh, look, I don't see any earnings on here. How do you know? Just come in here and like, yeah, winner, winner, chicken dinner. This one's actually going to have earnings tonight. Okay. So timeout. Does it matter what Capital One is? No, it does not. Okay. Do you care what Capital One is? You're like, it's a credit card and they have kind of good commercials. Okay. Except I'm not even sure they use Samuel L. Jackson anymore. So they spend a lot of money on spokespeople. Okay. Forget all of it. Okay. By the way, there's a lot of different ways to actually do this. I like the scanner. I think the scanner, 44 different products, but I can even like whittle it down more than that. Okay. I can whittle it down more than that. I can even show you how to do that. But I'm going to start with Capital One Financial. Now, Capital One Financial. Let me ask you a question, and a true and legit question. Is Capital One Financial going to move up or down based on its earnings announcement? Okay. Is Capital One Financial going to move up or down based on its earnings announcement? I think it's a pretty easy question. Okay. It is. The only problem is, okay, because like somebody actually said, up, okay, it's going up. It will move. I mean, for the most part, could it stay flat? Yes, but that would be, okay, a little bit of an anomaly because that'd be like flipping a coin. I actually promised myself I could have a coin over here, but I don't. It'd be like flipping a coin and the coin literally coming up on the side of the coin. That would be wild, but crap can happen. The point being is, it's going to move. The first thing we want to discern, okay, and I'm taking you through earnings flip criteria, okay? The first thing we want to discern on Capital One, okay, and I'm going to give you some steps over here, is liquidity. Is this little monkey moving? Like, does it actually have trade on it? Does it have trade on it? It's the number one piece of criteria. Because I'm going to tell you right now, people come up, okay. Sorry, I totally forgot. Like I was thinking Samuel L. Jackson. Somebody's like Jennifer Garner. Okay, you got me there, man. That's Johnny on the spot over there. I love it. So you got to check liquidity because liquidity it's a non-starter. Like people go, I want to trade Joe's tree cutting service. Well, who trades Joe's tree cutting service? You and Joe. Okay. And I'm sorry, that's just not going to get it done. The liquidity in here, it's doable. There's 8,000 contracts trading. That's not crazy high. Okay. But you're Steve sitting at home over there. You look at something like Meta today, like Meta's got 165,000. You look at Boeing, everybody knows Boeing, right? 120,000. You look at Caterpillar, okay, Caterpillar's only got 6,000. The point that I wanted to make is that, it's a little bit off the beaten path over here. Walmart's got 48,000. Okay. I'm looking at option order flow. So I immediately look at this on Capital One Financial and I discern instantly, I can probably trade this. Now I'm going to go further. I'm going to look at its options in here, make sure bid offer spreads are good. Okay. So that's the very first thing. Liquidity, say it to yourself. Liquidity, liquidity, liquidity. That's step number one, right? That's liquidity. Okay. So liquidity in Capital One, that's there. Is it there? And we say, yes, check. Two, okay. The second point, after we looked at liquidity, we checked volume, bid offer spread, checked everything. Okay. We're going to look at something called EM. What does EM stand for? It stands for expected move. Now, some of you are new. We ain't got to get crazy with it. We don't have to get crazy with it, but I'm going to explain this. In every liquid product, we have what we call expected move, EM. Okay. Where is the EM found? The EM is found on any good trading application. Expected move is $7. I could come over here to Tasty. Forget it, it's Microsoft, but who cares? Microsoft, it's $3. In Microsoft, like instantly I can discern what the expectations of price movement happen to be. Okay, pretty cool. So expected move on Capital One is $7.38. Now, what this means, okay, and bear with me, right? We're supposed to move up $7. We'll just round it to 7, okay, just for ease, okay? Or we're supposed to move down $7. Now, time out. You go, who says so? By the way, if your brokerage platform doesn't have this, we teach you how to do it without having that. But it's supposed to move up $7 or down $7, okay? Or stay somewhere in that range. There is an amazing phenomenon around earnings, okay? Those numbers, what we term expected move, you go, how does it calculate that? Like, where does that come from? It comes from the option marketplace. If you added up a call and added up a put, it equals $7.60. Like, how easy is that? I added a call to a put, and there it equals the same thing. Like, again, I don't want to blow anybody's mind over here, but the options marketplace, like, again, I'm not trying to freak anybody out. I just want you to understand options are an instrument, okay, that handicap forward movement. So the options today are trying to figure out where we're going to be tomorrow. And right now, what those options say is expected move equals plus or minus $7. So we're supposed to move up $7 or down $7. Now everybody goes, yeah, but Don, that's great. That's great. Thank you, Captain Obvious. Which way are we going to go? What if I told you it didn't matter? What if I told you, okay, you're going to move up $7, you're going to move down $7. What if we place a trade that's so inexpensive? It doesn't matter if you're wrong. You just move on to the next trade, move on to the next trade. What if I placed a bet on this one? Just a very finite, and I'm going to call it a bet in this case. What if I placed a finite bet right here? Okay. And that cost us, let's get crazy. Let's say if that trade, okay, were to cost us just a very, very negligible amount. Let's say the trade cost us like 30 cents. So 30 cents would cost us $30. If the trade cost us $30, but I might be able to make as much as like $2 off of it, would you do it? Would you do a trade that costs 30 cents that can make as much as $2? You tell me. All right. A couple people, some people are thinking about it. Okay. All right. Of course, it's not bad. But the problem is, and that's good. Okay. The problem is, though, over here, is you look at it and you go, well, what if I'm wrong? Who cares? The trade expires. I have one on right now. What if you are wrong? Trade expires. Okay. Oh, but still my heart. I lost 30 cents. But if I'm right, I might be able to make as much as $2. So what you're doing is you're basically flipping a coin. Am I bullish or am I bearish? Okay. I'm going to let you guys determine. On Capital One Financial, somebody said he thought it was going to go up. Okay. The risk reward is phenomenal in here. Now I just got to be able to build the trade. Now, it's not a pure 50-50. I don't want you to think it's pure 50-50. We're not necessarily definitely going up here or definitely going down here. We could stay somewhere in the middle, right? But around earnings, okay, around earnings, and I'm going to give you the real statistics, around earnings, there is as high, okay, as a 40% probability of going here or here. You go, ooh, a 40% chance. Okay, yes. If you're wrong, you lose next to nothing. But if you're right, it's a grand slam home run. This trade that I'm showing you here is all about doing it sequentially. If you do, for instance, it's a big earnings week next week. If I do 5 trades next week, I may only have to hit 1 trade to make all the other ones profitable. Okay. If I do 5 trades next week, 1 out of the 5 can hit and is knocking the cover off the ball. Okay. Literally knocking the cover off the ball right now. Right. And that is important. Okay. Now let's go into Capital One. And I don't want to go into any depth. Somebody said, okay, somebody had said, by the way, we're okay, right? Somebody said we're frozen, but I think that's just you. It's you. It's not me. You're damn right. It's you. Yeah, no, we're good. So I can see. When you get into this a little bit, right? And I'm going to show you exactly how to do the trade right now. Okay. When you get into this a little bit, don't worry about the bullish or bearish. All I want you to think of is, okay, what am I going to do? Earnings flips. Okay. Taking shots, taking shots, taking shots, taking shots. Okay. And when earnings season is heavy, you try to want to do at least 4 to 5 trades, okay, in that particular heavy week. Every earnings season, at minimum, you want to do about like 15 trades. Like the earnings season comes like, for like a 3-week period, you want to do at least 15 trades, okay, in like 3 weeks. Could you do that? Of course you can. And then, by the way, earnings is all the time. like Nvidia reports at a weird time, and Costco reports at a weird time, and Walmart reports at a weird time. So you can always do this, but during heavy earnings season, okay, it's great. So what I'm going to do is I'm going to take this expected move, okay, and I'm going to play what I term pin the tail on the donkey, okay, pin the tail on the donkey. In this case, the donkey is at about 160. You go, how'd you come up with that number? Here's the stock. Stock is trading at 153. The expected move is $7. Remember the distribution curve? Now I could be bullish or bearish, but somebody else, okay, somebody else said to me, it's going up. Okay, I'll take it. Somebody said to me that it's going to go up, so let's get crazy. Okay, and you go, how'd you come to 160? And this is where I go, oh, magical calculator. I took the 153. Okay, let's call it 46, and I added $7. Okay, and 35 cents to it equals basically $1.60 and change. It's not perfect. Okay, because you have to actually pick a strike. But I'm going to pick the 160 strike. Right click, come over to buy, come up to something called butterfly. Somebody goes, I don't even know what that is. That's okay. Okay, I'm going to actually try to pay 30 cents for it, fire it. Filled, issued, he scores. Now, if you look at the trade, let's come over here, create a duplicate order. That's a butterfly. Okay, and somebody goes, I have no idea what don't worry about it. The trade can make as much as 250. You're not going to make 250 on it. The trade can really, truly make about $2. I don't mind saying that to anybody either. Like, look, I'm actually going to take you over to my analysis page. Let's come over to analysis. I apologize. I was doing complex things earlier. Okay. We're going to actually take Capital One Financial. This is now a real position. I am in my analysis. Okay. And here we are. It's pin the tail on the donkey. Okay. This is where the market is. If we're here at 160, that's winner, chicken dinner, because you make just over $200. Okay, that's what you really make. So this trade literally can risk 30 cents. And you're like, how'd you fill at 30? I just filled. I could have tried to fill at 28, but I'm live right now. But look, I just filled at 28 cents too. So by the way, and somebody goes, you're really trading it? Why the hell not? Like I place these trades, so why wouldn't I fill it? I'm fine with that. Okay. Done. Now you go, now what do you do? Okay. Now I wait. Now don't ask the question. Everybody goes, well, why don't you put one on here and then one on here? No. Bad animal. Bad animal. That actually lowers your probability. You don't want to put two of these on. That, okay? Because what that basically it's doing, it's like if you were playing roulette and you put on a bet on red and a bet on black, you basically like offsetting, you're like, I might win. And then it comes up 0, 0, 0. You're like, I lost on both. Okay, I suck. You can't do that. You want to take strategic bets. You want to be a heads or tails. You can't think about it the way that you've been taught to trade is like, I must be right. I must be right. I ain't got to be right. I just took $30 and I could turn that $30 into $200. Why do I need to be right? Okay. Why do I need to be right? I got to be right like what? 1 in 5, 1 in 6 times? Yeah. Okay. Look, I actually have one of these trades on right now and it's hitting. Okay. I literally have one on and it's hitting. I paid 60 cents for one in the SPX 2 days ago. Okay. And it's marking right now at $1.75. So I took 60 cents and I turned it in. Well, right now I could close it for $1.70. Okay. $1.75. I'm waiting till it hits 220. Okay. I think that's pretty damn good, don't you? By the way, I show you proofs in the pudding over here. So this is in cough, but I'll show you in the SPX. I did this trade the other day. I paid 60 cents for it. See, that's a live trade. Okay. It's filled. I come in here, go create opposite order. I could fill this trade right now. I could get out of it for about $1. I think I could get out of this for $1.75. Is that a good enough return? Because at $1.75, I don't want it. It's 200%. Okay. I want at least on this trade over here, 250%. And I think at 225 is what's 225 against 60? It's 246%. Okay. That's a pretty damn good return. So I just put one, okay, on Capital One Financial. So if we're bullish, okay, by the way, I'm going to blame this on whoever was in the, whoever's in chat, okay. All right. And again, I'm only one day out, not doing it. This is an earnings one. Okay. Let's get crazy. This is the way to do it. This is the way to do it. Now, okay, you guys want to do another one just to make sure that we understand this? Okay, let's do another one. What else do we have coming up? Somebody mentioned Colgate Palmolive. I saw that on my notes over here. I actually Colgate Palmolive. That's like freaking toothpaste, man. Okay, so I went into the scanner and I'm actually clicking right here on Colgate Palmolive. Like, look at this thing. It's like watching paint dry. Eh, I think I'd rather do the next one in something like, and again, I think I want to do this Decker's Outdoor. I mean, I know what Decker's Outdoor is. $150 product, kind of oscillating back and forth. Let's get crazy with it. All right, let's go look if it has volume and liquidity. Right, that's step number one. Look at this. This one's actually got some size on it. Stock's up a little bit today. What do you guys want to be, bullish or bearish? Okay, look, it's Deckers. You decide. Okay, you decide. You tell me, bullish or bearish. This one, okay, this one moves. So you want to be bullish or bearish over here, Deckers? Okay, anybody? Aaron said down. Okay, got another bullish. Come on, what's our market? Okay, bullish, up. I got to tell you. By the way, I'm totally undecided over here. I'm listening. Ooh, Blake Young. I'm bearish. If you guys don't know Blake, okay, Blake is one of us. Blake is a TheoTrade, okay, trader. So there's so many bullish in here. I got to take the other side of it. Yeah. So year to date, it's up 35%. I'll take the bearish one on here. So how am I going to do it? I just looked a second ago. I was like, okay, it's got liquidity. It's got 17,000 contracts trading. Oh crap! This thing's got a $13 expected move. I'm like looking at it. That's big boy. That's a big boy move. Like I guess I'm going to do this and $13 move. Oof, that's all the way down like below here, somewhere in this neighborhood there. Okay. By the way, when I trade earnings, like I trade them over here. This is a big gap up. This is a big gap up. This is a big. Look at this. In the last couple of earnings too, gap higher. Look at that, gap higher. And this one, gap higher, slid lower. And this one over here, okay, it's got a question mark. Who cares? Let's do it bearish just for the hell of it. So I'm going to come in here. It's a $13 move, right? So I just looked a minute ago. It's a $13 move. All I have to do is add the calls to the puts. It's a $13 move. $13 move. Everybody see it? Add the calls to the puts. Basically, it's the same as your expected move. Great. Bring up the calculator. Okay, let's do the calculator. Let's come in here and say, oh, magic calculator on 152.71 minus, okay, minus means bearish, 13.50 equals right around the $139 mark. Deep breaths, okay? So somewhere around this $139 mark is where I want to put my fly, okay? Now I can round it to 140. I think it's okay to round it to 140. Breathe. I know it's only the engineers that get crazy about that, right? So I go buy, okay? And I'm going to come up to something called what? Butterfly. And here's the real question. This is a volatile underlying, okay? I might be able to do a big boy fly here. Okay. I don't know. I mean, when I say I'm doing this live, let's do it live. Okay. This is a $5 wide fly. If I come over and analyze this, okay, that is one hell of a window that I've got. It's a huge window of opportunity. Okay. And it only costs 40 cents. I'm not sure I can fill it at 40 cents. Sure as hell I'm going to try. Okay. So he goes, oh no, he's not filling. Okay. Yeah, that's crazy. Who cares? Put it at 42 cents. Just pay 2 cents more. Okay. Oh no, he's not filling. So I'll come in here and screw around with price just a little bit. Okay. At 44 cents, between 44 and 45 cents, I know I'm going to fill. Okay. And there I am filled. Okay. Done. Do you realize that this one, I'm going to go to the analytics. This trade that I just put on, I just want you guys to see it. I literally just paid $44 for it. It can make what? As much as $455. Realistically, I don't think I'm going to make more than about 300 on this. Okay. Because this is like, again, it's pin the tail on the donkey. If you're perfect, you're going to make, 400 and change on it. So why did I do it bearish? I just told you it doesn't matter. When you can risk $40 to be able to make two or 300, who cares about being right or wrong? It's just about sequentially going out and continuing to put the trades on, flip the coin. Okay. It's so important. So important. The wings don't have to be as wide as the expected. People, they just think too much in here. This is my window of opportunity all the way, okay, from a 145 all the way down, okay, to 135. That's the window. If it goes up, oh, but still my heart. Tomorrow, this expires worthless. Now I'm just putting on two positions. Okay. Could I do more than? Of course. I can lay on butterfly, 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 put them all over the place. This, okay, this is the stuff people want to learn. This is the stuff where, again, we can go out and risk 40 cents to be able to make $2 or $3. Okay. And, it also, like, I love this because it keeps me engaged in the earnings. Like, it totally keeps me like engaged in markets. I like to be engaged in the markets, right? It's what I like to do. And again, I could do one in Colgate Palmolive. We can just keep going and going and going. And like, oh, let's put another one on over here, right? Like, why not? And all of a sudden, you can quickly, by the way, when you get better at this and you know what you're looking for, Colgate Palmolive, is this one going to be bullish or bearish? Sure, it could be bullish. I don't care. Okay. I don't care. I just look at this and say, like, oh, 99 cents and change plus like $4. So that takes me somewhere over here. I go buy. Okay. I come over to what? Butterfly. Now, okay. You're the part that you guys like are probably questioning. How does he know which butterfly to actually use? Yeah, there's some specifics and some criteria behind this one. Okay. Where there you go, filled. So I just did Colgate Palmolive too. Now this one's a $2 wide fly, but Colgate Palmolive doesn't really move. So I just put on a bullish trade in Colgate Palmolive. That's real. So we just placed 3 trades. Look, you got to be able to, execute, execute, execute. Who cares? 3 earnings trades. Okay. I'm excited now. Now I get to actually watch tomorrow. I get some skin in the game for tomorrow's trades. Like, I'll actually build a whole new category for this. I'll move this to a group, go add a group. Okay. We'll call this the, okay, earnings flips. Hit OK. And what that's going to do, it's actually going to build me an entire area, okay, where I can actually see my earnings flips. Okay, there's one of them. Here's another one where I go move to group. Watch this. We got a group. We got earnings flips. Okay, and we can actually throw each one of these trades into the earnings flips groups. Okay, what do? We do absolutely nothing until tomorrow. We'll watch these trades tomorrow morning. We'll see how they go. Okay, and again, I was showing you guys earlier. I have one on the SPX that's working out right now, but that's in an index product. These equity products, and this is where it's at. This, okay, is what you want to do around earnings. And what we've actually built is introducing earnings flips alerts. Now, earnings flips alerts. This is actually, okay, execution behind it. Couple of things. Number one, earnings flips alerts. We are charging $900 for the year. The class, okay, I've got a highly detailed class already ready to go for this. Okay, this is a strategy that I've been using for years. I put together the original class for earnings butterflies years ago. Okay, completely rebuilt it, refined its criteria, made it that much more like, concise on how you can actually place these trades. Okay, but we took it a step further. We actually are doing alerts based on this. Because a lot of people are like, well, but I would just not that comfortable, because some people can go to a class, they can discern immediately what they want to do, and they can actually place these trades. Some people, they want the alerts. And I'm going to tell you right now, for $900 for the whole year, you only have to hit, I don't know, 3 or 4 of these in a year. That's it. And you're going to get 15 trades per earnings season. Okay, we're going to give you 15 trades per earnings season. And by the way, you're going to see Blake Young's picture up here. There's a reason, because Blake is going to sit there literally, okay, every Wednesday, Thursday, and Friday and do nothing during earnings season but fire these trades off with me. He's the one where I'm actually going to be like, I'm doing this and doing this. Blake is actually going to be doing the executions behind him. We literally had to dedicate a person to sit in the screen and find some of the best trades, because the criteria in the masterclass, okay, it's deep. Okay. So I'm actually going to build trade, build trade, build trade. Blake's actually going to be there refining it and pick out of, for instance, 10 trades that I come up with like a day. Blake's actually going to finite and refine those down to 2 or 3. And those are the alerts that are actually going out. Blake's also going to be hosting, okay, the pre-earnings huddle, which is actually him going through and saying, okay, it's earnings season. We're going to figure out what's in play, what's not in play. Okay. We're going to refine which underlyings we're even going to consider in here. Okay. The earnings flip watch list. The watch list, it's probably close to, I would say, 80 products. I know it says 100 in here. It's probably more like 80 products. There's about 80 things that I truly watch, okay, on here, and each quarter it changes. And then, of course, I'm actually going to shoot a video on how to place your first trade. I just want to make something clear. I'm doing the class. I'm doing the class. Blake is actually going to help me in the class. This particular trade, okay, took years of research. It's like one of the most heavily studied areas of anything in the whole entire marketplace is earnings. It took us years to be able to refine this particular butterfly. So we're taking the masterclass. By the way, I'm redoing the masterclass because I refined its criteria substantially in the last couple of years. Because somebody earlier was like, "Oh, it's the earnings butterfly class." It's a great class. I mean, even those of you like, look, who's taken the class in the past, right? Okay, if you've taken the class in the past, probably like, it's a damn good class. It's better now. Okay, it's much better. And I've had this one like in the bag for like a while. I want to bring it back, but I didn't just want to redo the class. Okay, Blake was like, you should trade these. You should do some alerts. Like, yeah, but it takes. I mean, this takes time. This takes a lot, like time for us, because we will go through this huge subset of 80 different products and whittle down every night to like 10 trades. And then from there, Blake is going to further refine and send out, like 3 trades. Like I just did 3 here. And then we're going to do a, quarterly pre-earnings huddle, which is actually talking about, refining the criteria, setting up the watch list. And again, how to place your first trade is just me talking about like, look, this is your first, your first earnings flip. Let's get to it. First of all, Blake Young, he's got 24 years trading experience. Okay, Blake was a commodity trading advisor. Look, Blake has worked with me for 20 years. Okay, and here's the real thing about Blake. Like, you're like, why do you have to bring Blake in on this? I'll tell you why. Blake is better than I am with equity products. I don't mind saying that. Blake's better with equity products. Look, Don, that's me. I'm an index guy. Okay. Don like indexes. Okay. I trade tons of equities, but I think Blake has the better feel. And Blake actually has the time to sit there and execute. Okay. If you know anything about me, I got to fire and look away. Look away. I'm hideous. Okay. I just, I have a lot to do. So Blake's actually to sit there with the earnings flips and go through them. You realize there's 3 trades on. One has to hit. Who cares? I paid like, what did I pay for these things? Okay. 28 cents, 44 cents, and 28 cents respectively. Okay. I mean, I put on 2 of Capital One, but like 28 cents, 44 cents, 28 cents. Who cares? Like, whatever. I don't even have like, but obviously I did 2 contracts here, but less than $100 of risk. Okay. Like $100 of risk for that. And I can actually make like, a few $100 off of it. And you can do as many contracts as you want. That's comfortable. Okay. Blake has helped me build a number of courses, but in this case, Blake is actually, he's going to sit there and get tortured by the earnings flips. And I'm down with that. By the way, on here, okay, you go to theotrade.com/flip. And I'm actually going to take you over there really quick, because before I even get here, you scroll down to the bottom of the screen. Okay. It's $900. Okay. It's $900. And if you somebody, I don't have 900 right now, call us. We can work something out. I'll give you the number here momentarily. Be sure to put a viable phone number in there. This is a trade that will be texted out. I want to make that clear. We will text and email, but this is a trade that is going to be texted out, because you want to know, like, look, the day before the earnings, like if earnings are coming out on Friday, we would normally text this stuff out, okay, on a Thursday afternoon. So all of a sudden on Thursday afternoon, boom, 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 we're hitting you with 2 or 3 texts. Okay, that's what's important. It's important. So this is for the whole year too. It's $900 for the entire year, which, as I said, it's like, the text alerts and so forth. Okay, really, really straightforward. Now, again, I'm going to give you the phone number here momentarily. All you basically do is, to the order, But in here, again, it's theotrade.com/flip. I'll throw it up here. Theotrade.com/flip. It's F is in flop. Okay. L is in lop. Okay. It's theotrade.com/flip. Pretty straightforward. Anyway, we still do a 90-day money back guarantee on this, like everything here. Look, I always say this, we want people that want to be here. Okay. And this is something that, I'm rolling out like, oh, but it's going to miss the earnings season. Okay. Intentionally. So I wanted to do it during earnings season to get everybody up to speed. You get to watch a couple of trades and so forth. But coming into the next earnings season, you're going to go full bore. And there's definitely earnings still late November, and there's still even earnings in early December. So you start with some onesie twosies, and then we'll go full brunt as we come around into next earnings season. Okay, but there's no stipulations to the money back guarantee. There's no stipulations. You don't have to do anything but email us. It's 90 days. Okay, which, by the way, when I say 90 days, look, in 90 days, you're getting the master class. I'm going to do the class on November 12th. Again, I'm going to do the class November 12th. So, and then the class itself is like a $500 value in there. Then you're getting 15 trades per earnings season. Obviously there's 4 earnings seasons in a given year. It's another almost $5,000 value. Then you're getting these calls, which are about 90 minutes quarterly with Blake. It's $500 value. Okay, we'll update the watch list, and of course, you'll have a video on how to place your first trade. So again, it's a little softer way to get you into this, right? So there's a money back guarantee on it. That's critical. Everybody needs to know that. So the earnings flips masterclass, just to give you some details on the class itself. By the way, I'm going to make sure that I see any questions that come up in here. Okay. Oh yeah, the number in there too. Some people were saying like, oh, I need to give them a call, and we'll give that number here momentarily. Let me just scroll forward to it. Okay. 623-244-5657. Again, 623-244-5657. Seriously, if you need us, call us. Like, have no hesitation whatsoever in being able to call us. So, and again, there's 90-day money back guarantee, and we do that on everything that we offer because, look, life sometimes gets in the way. I get it. It's totally understand. So, in the masterclass, okay, what, pray tell, are we actually doing in the masterclass? The masterclass, okay. And I know that there's some people that just like, oh man, another class. And okay, look, you can do this and just follow the text alerts. Okay. You can do this. You can follow the text alerts. And I'm fine with that. Okay. I'm a person though, and I always put it this way, like, I don't want to just eat the sausage. I actually kind of want to know how the sausage is made. I think you'll have a lot of insight. It only takes 3 hours of your time, I promise, but I think you'll get a lot more insight to what it is, okay, that we're trying to do here. And the cool thing is, like, you don't have to have a lot of money in your account, because I know somebody was talking about like, day trading in this. You put the trade on, and if the trade on Capital One doesn't work, I can just let it expire. I'm not opening and closing. I'm just opening. Okay, kind of cool. Anyway, it's good. So when you are actually doing this, I'm a big proponent, okay, of you going through the class. Like, and I'm a proponent of that. I want you to actually see some of the details behind it. Okay. And, even though people like have, they've gone through a class and they've learned this, like, look, we're not just giving you a class. We're going to support the class specifically with alerts, because I trade this. I know Blake trades it, and I know Blake is better in the equity side of the business than I am. I mean, just Blake knows more underlyings than I do. I told you guys to begin with, I grew up as an index guy, but I took some of the mathematics from the index and make it applicable to the equity products. Okay. And it's a hit right now. So the earnings masterclass, we're going to teach you, okay, all of the ins and outs of this. And it is simple. Like, this is not hardcore. I mean, you saw me go through it like this. There's a little bit more to it. Like, the hardest thing to justify is, how wide should the butterfly be? Should it be a $5 wide butterfly, a $2 wide butterfly? You saw me differing. I had a 250 wide butterfly, a $5 wide butterfly, and a $2 wide butterfly. I just did three of them. Okay. So that's the class itself. And I feel strongly about this. Look, the class is coming up. Okay. It's November 12th. We'll give you all the details of it. Everybody, yes, it's archived. Of course, the class is archived because some people are like, I can't make it live. I can't make it live. Right. Okay. Absolutely. All right. Now, continuing on over here. Okay. The alerts. And the answer is, okay, will the alerts start now or later? Yeah, we're going to start the alerts. Okay. Yes, we're going to start the alerts. And again, you will get the alert on both the open and the close, because I already see somebody asking that question too, which is awesome. By the way, 15 high conviction, okay, trades per earnings. That's minimum. That's minimum, but that breaks down to, what is it? This is $900 for the whole year. So that breaks down to $225, okay, per earnings season for basically, 15 trades. It's I mean, relatively inexpensive. By the way, we could go no holds barred. I'm doing 3 trades today. Okay. You'll get 15 high conviction earnings trades. We could do a lot more than that. A lot more than that. And we may actually, I wanted to give you the absolute baseline, most realistic. That's the most conservative number. Okay. During earnings season, legit, we could do at least 30 trades. Okay. We don't want to overwhelm people with text messages though. Like today, I like all 3 trades that I just did. Really only have to hit one of them. All right. So these will be texted and emailed to you, those earnings trades, right? By the way, a few people, so you guys know, again, it's a 90-day money back guarantee. I'll get to this again. So check it out. If it's for you, make sure if it's for you. I'm going to read the names of those that are actually enrolling as we're enrolling. Jason J from Canada, Kirk K from California. This just takes me about 7 minutes before I see your names come through. So don't panic. Okay, I'm seeing some names obviously come through and refreshing on my side, and you'll receive all of your all of your user information in a few minutes. So 15 trades per earnings season. Okay. Now earnings flips pre-earnings huddle. This is actually going to be led by Blake. So why Blake? Because Blake knows equities. Blake knows equities. So we're going to talk about the biggest plays that we're going to be targeting. Okay. I mean, the interesting thing about equity products, this doesn't have to be just done in like a Tesla. You don't really want to do it in a Tesla. Okay. It's going to be more or less you can do this in, maybe something like Capital One that, you wouldn't necessarily thought. He's going to actually take you through this wide array of underlyings. Some you may be familiar with, some you may not. And he's basically going to say, like, look, this liquidity, this has liquidity, this is liquidity, this is likely where we're headed. So Blake hands me a list. I start doing some of the trading. Okay. Blake actually whittles that down even more specifically. Okay. So Blake is going to be instrumental in helping execute these particular trades. It's instrumental. This is on our side to get these earnings flips and alerts out. This is a 2-person job. No problem in saying that. This is definitely a 2-person job. Okay. And that's why we're bringing Blake heavily into this. So the next one, earnings flips watch list. So we're going to obviously have the pre-earnings huddle. Okay. So every quarter, Blake is going to give you in the know. Then we're actually going to have the earnings flips watch list. So it's about 80 stocks that we're going to watch. And this is updated quarterly. So, I showed you guys earlier, I had a scan built in the S&P 500. Okay, so I had the scan built in the S&P 500. But the truth is, I don't actually scan the full S&P 500. I actually whittle this down even more on liquidity. There's a couple like little liquidity things in there. And during the class, I'm more than happy during the class. I'm actually going to be teaching the bulk of the class. I'm more than happy to hand you my scan. If you're on Thinkorswim, I'll show you my exact scan. Okay, I'll give you that. I'll give you the watch list, give you everything. Okay, because I want people to go and understand no holds barred in there. Okay, how to place your first trade. last portion of this puzzle over here is I'm just going to walk you through, and it's a very short, very concise video, okay, of how does one go about, okay, executing into your first earnings based trade. Okay. Yeah. So, by the way, yeah, we will definitely share the scan. And there's certain things I leave, I reserve, if you will. Okay. I reserve the right. Um, anyway, I appreciate that, but I reserve the right to hold back that scan. I will definitely share the scan. So I have built so many scripts and scans on here. Okay, just to give you an idea. Okay, these are all different earning scans, and tremendous amount of time and effort has gone into obviously building a number of scans specifically in here. So I got you, and we'll definitely share some of the scans, right? So, but how to place your first trade is important because it's look, you could be completely and totally like a neophyte and come in here and you don't have that depth, you don't have the experience. That's what we're going to impart upon you. All right. And that's where I want everybody to understand, like, you're going to get this alert. You don't have to pull over to the side of the road, like, really quick. The alert might come out with 90 minutes to go to the close. Okay. You have this window of opportunity to put the trade on. And if you miss it that day, don't panic. There's going to be three more tomorrow and three more to the day after that. Okay. When it comes to these trades, we really, the big trading comes on a Thursday. Okay. Thursday is the biggest day for earnings based trades because the Thursday trades come into Friday and the butterflies expand. Okay. Butterflies expand beautifully. Okay. So another name came through, Doug H from Wisconsin. So just again, it takes just quite a while before I actually see this coming through. So I love this because there is so many opportunities coming. Okay. Uh, Obviously, you just saw today. Today's it's only one day. Like next week though, it's on next week. I mean, I'm already basically looking into next week. Where I say next week, it's on. Like, look at the opportunities next week. And again, I'm already jumping to Thursday because Thursday is happy time for this. Okay. Look at all the different underlyings, that you could possibly trade. I mean, it's crazy. Like, these are all opportunities. Like, could you really do a lot of these? I would legitimately say, okay, you could trade probably about 30% of these. There's that many of them. Okay. And you don't need to do that. Right. We're just going to go through. This is why we have Blake involved. As I said, Blake is going to get tortured. Okay. Um, Blake's going to get tortured because he's going to go through everything. Okay. With a fine tooth comb to find the most liquid, like Peloton. They're still in business. No, he's going to go through with a fine tooth comb. He's going to find everything, okay, that would be effective in this particular list. He whittles down that list, okay, hands it to me. I find, like 7 or 8 that I want to execute upon. And then he further refines, okay, no, do this one. It's got better liquidity. Like, look at this, Intel, Juniper, okay, Halo. I mean, it goes on and on. Okay. It's huge, huge opportunities. Right. This is not about being right or wrong. Okay. You're trading for pennies on the dollar. You realize you're going to be able to trade stuff like Google. Okay. For what? A couple of pennies on the dollar. Apple, a couple pennies on the dollar. Right. You could have done, like, I don't love Tesla. Okay. But you could have done Tesla for pennies on the dollar. Nvidia, like Nvidia is an interesting one because it doesn't trade with everything else. Like, it has earnings much later. As I said, like, even go through the class and, November 12th. Okay. The earnings of Nvidia don't come to the week of the 22nd. So you want to get into Nvidia? Okay. Go for it. I mean, look, this thing's got dollar strikes. It'll cost you, 30 cents to be able to trade something like Nvidia. You can't do that with any other strategy. Okay. You can't do that. And when I'm telling you, oh, the class is this much, look, class already, like, it was one trade I just did here in the SPX. Okay. It's winner, winner, chicken dinner. Again, I paid 60 cents in the SPX. Okay. For a trade that looks like it's going to be worth, I might be able to get out of this thing for 220 later today. It's definitely worth $1.85 right now, $1.90 right now. Okay. So the thing's already up over 200%, and I'm not getting out yet. It's up 200%, and I'm not getting out. What are you waiting for? Okay. I'm waiting for it to come home. And that's why, okay, I'm going to tell you right now, that is why we are actually doing it this way. That's why we're doing this strategy with alerts. Okay. I mean, trade the biggest, baddest, meanest products on the planet for pennies in the dollar. Okay. Get into it. Like get into it. It's good. I mean, that's what you want to be able to trade. So again, it's 8.95 for the entire year. It breaks down to a couple of dollars a trade. Like even at the even if we do 15 trades, I think it breaks down to like $15 a trade. Okay, we may do double that. It breaks down to a couple of bucks a trade that you guys are getting, and I think you guys are really going to appreciate some of the trades and trading that we're going to be able to do. So it's great. So we are going to be feeding on this earnings season. Okay, I want you to be with us. So next week the alerts will come out. I want to say that again. We will be trading when next week. So we're really going to kick it off like next Wednesday, probably like maybe play onesie. By Thursday of next week, we're going into high gear. We're actually going to send the trades. You go, but I haven't even done the class. It's good. Okay. You want to trade with us? Trade with us. Okay. By the way, when somebody said, what happens after the year's up? Okay. The year's up. You can do it again if you want. This is something that we're going to continue to do. By the way, it's not a membership. We're not like, renewing here, renewing. Like you determine what you want to do at the year's end. In fact, I'm going to answer some questions. So you get the earnings masterclass, you're getting the trades, you're getting the pre-huddle, which is done quarterly by Blake. Okay. You're getting the watch list and obviously how to place your first trade. It's TheoTrade.com/flip. Again, I want to reiterate, there is a money back guarantee. We are doing 50 spots, okay, on today's 90-day money back guarantee. Now we do that to literally to incentivize people, okay, to enroll for this. All right. And again, we give you unlimited email mentoring. And I say it's an extra bonus in here, but we want you to be able to email us if you need us. Like if you have questions about a particular trade, the way you can ask us trade related questions. We don't hesitate to answer those. So the retail value is $5,797. It's $900 today. Okay. Again, TheoTrade.com/flip. Okay. So let's continue on over here. Now, okay, we are here to help. If you ever need us, support at TheoTrade.com. Right. Continuing on over here, if you want to call us right now, 623-244-5657. Again, 623-244-5657. Now we're answering questions in the chat room. Okay. We've actually got Blake in there. We've got Jeff in there. Okay. And they're answering questions live right now in the chat room. But if you want to talk to somebody, okay, because I know that there was a question that came up, can you actually break the payment down? Yeah, theoretically, we can do anything. Okay. Call us if you need us, call us. Okay. You just come over here again. It's TheoTrade.com/flip. Again, TheoTrade.com/flip. Okay. I like that. By the way, that was actually a nickname of mine. Flip was a nickname. It was not my trading acronym, but it was a nickname of mine. And it actually had to do with the coin toss thing. So that was not my trading acronym, though. All right. So again, I like what somebody was saying. Okay. Yeah. Blake is solid, and Blake has that time and the effort to put into this particular strategy, and that's exactly what he's going to do. And it's a lot of time and a lot of effort behind the computer screens to find you the very best trades. It's a lot of time and a lot of effort to find you the very best trades. And I mean, look, people, that's what we're charging you $900 for. We're charging you because we feel, okay, in the end, we place these trades, okay, we're going to be far better at refining them. I mean, I've been trading this strategy for the better part of a decade. Blake's been trading it with me. You got to remember, we worked together for the better part of 20 years. Blake and I have worked together for 20 years. Same with like Brandon Chapman. Jeff Bierman goes way back, but this group. But that's what you're really paying the $895 for. Okay. So we're here to just literally go kind of hand in hand and kind of hold your hand and walk you into the strategies. What's funny about this is when you first start, this, you're like, just like, you feel like a fish out of water. By the second earnings season that comes around, okay, you're going to actually be sending me trades and being like, oh, this is what I want to do. And I'm like, that's actually a good trade. We're all going to do it. But we're gonna hold hands on these on this first earnings season. So I like to do the class right in the middle of that earnings season, kind of catch the tail end of it, place a couple trades together, and then by the next earnings season, okay, you're going to be ready to roll. So let's answer a couple of questions over here. Again, going hand in hand on these things. Again, I want to make sure that everybody gets. I want to make sure everybody gets your questions answered. And like, look, you want earnings season, okay? I mean, literally, you guys want your earnings season. Like every earnings season should feel like Christmas. You got to look forward to it. I actually do look forward to it because there's not another time of the year that you can be this active. And it's cool because you might have like 3 or 4 trades on and you're like, yeah, like I am engaged the next morning. Like I'm going to tell you guys right now, I just placed, obviously, okay, I have these 3 earnings trades on now, plus this SPX one. The SPX one may close out today. I don't know. The SPX one's going to be big. I mean, just based on this one trade's already up, huge. But I've got these 3 trades on right now, and that's enough. Like, I'll be waking up in the morning and be like, oh, what's Capital One Financial's earnings? Okay, because it doesn't matter where they are today. It matters where they are tomorrow morning, and I'll be looking to get out of those trades. It's an exciting time of the year. It makes earnings exciting, but I like it. It's like it's Christmas 4 times a year over there. Okay, it is good stuff. So first of all, let's answer a couple of questions over here and make sure that everybody's good. Okay. People always ask us what you need. Look, we provide everything. Okay. And again, I'm just generalizing over here, but we provide everything that you're going to need on here. A laptop, internet connection, you're fine. You know what? You don't even need a laptop internet connection. I always say this to people, okay? Bring us your phone. Anything we do now, you can do off of a phone. I mean, literally anything you can do. Because if you haven't seen some of the mobile trading applications out there, they are sick. Okay. It is unbelievable what you can do now on a mobile trading application. Um, Annual access. This is annual access to earnings flips. All right. So that's as plain as can be. It's just an annual access fee over there. You want to do it next year, do it next year. That's fine. Okay. The next thing on here, you can email us anytime. Okay. You can email us anytime and you get a response within 24 hours. Most of the time, okay, you're actually going to get an email back within a few hours, but we always say 24 hours because some people are like, it's like a Friday afternoon, 5 minutes to go to the cash closer, like, I need an answer. Like, calm down there, cowboy. Okay. So that's important. That is important. And by the way, I'm going to talk about all the different order types here in momentarily. You will get your questions answered. I do, by the way, people always like, do you answer emails? Of course I answer emails. Okay. That's what we do for like a few hours a day. Myself, Blake, Jeff, okay, all of us. We just answer emails. I mean, like legitimately in a given week, we answer over 2,000 emails a week at TheoTrade. So, by the way, some more names are coming through. As I said, it takes about 7 minutes before I see him. Steve H. from Ohio, John B. from Texas, Gerald F. from Washington, Adil A. from Saudi Arabia. I butcher your name all the time, okay? And I'm pretty sure we've met each other, and I still am butchering your name, okay? All right. Is that Devondra from New Jersey? Did I get that right? Okay. Is it Devondra? So that's a cool name. I actually like that name. So, by the way, tell me in chat if I actually got that name right. Like I need to know if I'm pronouncing your name correctly. Okay. I butchered the other one. I'm not going to butcher this one. Yes. Because it could have gone both ways over there. Thank you. All right. So it could have gone both ways. Jersey. Okay. I'm a New Yorker, and actually the other partner here at TheoTrade, he's Jersey boy. He is a Jersey boy. All right. So the email, support at theotrade.com. And by the way, we always use the common inbox. And I'm going to tell you why we use common inbox. Like, how come you can't just give me the direct email? You can, but when you go to support at theotrade.com, by using a common inbox, it actually delivers mail to everybody individually, we actually can track exact time. Okay. So if you email me directly at my personal email address, it sit in my inbox for a week. I might not see it. But if you go to support at TheoTrade.com, when it comes in, it actually starts the timer on it. Okay. That's why I say 24 hours, 24 hours, because we actually can look at all of the statistics. We actually use something called Zendesk. I know a million people know what Zendesk is. We use Zendesk. We actually look at the statistics of how long it takes to answer the average email. And right now, a general support email, okay, just general, not necessarily trading question, but general one, takes about 13 minutes for Brian Aponte and his crew to actually answer. So we're on it. Variations of the trades can be placed in an IRA. You can do this stuff in an IRA with as little as $2,000 in the account. Okay. Everybody's like, is it day trade margin restriction? The only one that's really hardcore about that, Charles Schwab is pretty hardcore about day trading margin restrictions. But day trading margin restrictions, look, you can place a trade, it expires worthless. That doesn't count. Like, so on your butterflies, if you do three of them and one hits, great. Okay. You don't have an issue. All right. We can help you get approved. Okay. For options trading at several major brokers. That always comes up. People say like, oh, like, well, I can't get approved. I can't do this at E-Trade. You can do it. All right. You can do it. Just let us get you set up. Okay. And we deal with many of the brokerage firms. By the way, we have relationships with tons of the brokerage firms out there. The people that ran Thinkorswim, I left the brokerage industry. I don't like it. I do not like FINRA. I do not like the Securities Exchange Commission. Not one little bit. Funny thing is, Tom Sosnoff technically left the brokerage side of the industry too. The truth is just we just hated the regulation side of it. So we opened up obviously TheoTrade, but I have friends that run all the major brokerage. Okay, from Robinhood to Charles Schwab to Tasty, okay, to E-Trade. I even have, again, know some people that interact with brokers. We've got you covered. Look, there are 50 riskless spots available. So get results, enroll for TheoTrade now. There's no risk to you. Like there's no risk. We have 90-day money back guarantee in here. And that's something like I'm pretty adamant about. Again, and I always say that we want people that want to be here, and we want you guys to be comfortable with every product that you would ever have at TheoTrade, and the trades. Like, look, I'm not going to sit here and tell you like these trades are, we're taking shots. 1 in 3 trades work. Okay, that's profitable. That's what you got to understand. It's not about like every trade has to work. No, it doesn't. Okay, all right, not every trade has to work, and that's what's so important. All right, it's TheoTrade again, .com/flip, TheoTrade.com/flip. So just making sure that we get some of the questions in here answered. Good stuff. Okay. Oh yeah. Does anybody know you're trading some of the butterflies with me? If you want to know the COF butterfly, okay, it's the 57 half, 60, 62 half. Okay, call fly. Okay. By the way, you can do the put fly. It's okay. Like my feelings are not hurt if you take the other side of my trades because we're taking some shots in here, right? Deck. Okay. What do we got in deck? It's a 35, 40, 45. Okay. And these were good fills. They were really good fills. I'm actually surprised how good my fills were. Like on Capital One Financial, 28 cents, 44 cents for a $5 wide B fly. Okay. That's huge, right? 28 cents over here. So good to go. I appreciate that one. So I think I've got most of these answered. Somebody's saying since stocks are not cash settled, how do you exit these flies? Okay. Oh yeah, no, exiting a butterfly is like nothing. So everyone can rush to get out of the trade. Everyone can rush to get out of the trade. But the truth is, it doesn't make a difference in these underlyings. Okay. The market makers are hedged on them. Okay. We're good to go. No problem there whatsoever to be able to get out of the trade. Okay. Another question came in. Can you do this good till canceled? Blake can definitely give you some guidance on there, but I'm just going to tell you something. Can you do this good till canceled? Okay. Good till canceled is an order type. Okay. And you're in and you're out basically, okay, in a day's time. You can do a good till canceled order. but your best returns are going to be, okay, predicated on when we send the closing order and getting out of that, right? So that would be my biggest thing to you is yes, and Blake can actually walk you through that. But okay, the more you're willing to sit there and kind of pay attention, the I think that the more effective that you're going to be. So I just wanted to give you that kind of lowdown on there. But yes, you could use those order types. All right, with that, I want to thank everybody for tuning in today. I hope I got most of the questions answered. If not, we are here in the chat room right now. Myself, Blake, Jeff, are all in here along with Roman to answer all of your questions. I see a couple more names coming through, so I apologize for not reading off every single name that was in here. Um, it's been nice actually talking about this. Been a while since I've actually discussed earnings butterflies to a relatively new group, but hope to see everybody at the class over here, earnings flips. So thanks again, and have a great afternoon. Bye bye.